I'm going to the multiple chart grid that we have in here, and I'm going to show you 4 different charts on each of these 3 indexes, and you'll learn a lot by looking at this. I know this, for those of you that are first looking, and I'm zoomed out pretty far here, a couple of years, this is a busy chart. There's a lot on here and a lot of notes, which our members really get to be familiar with. What we're looking at the bottom here are cycle brackets. These are the guides to help us see the rhythms in the market. There's actually 2 on here. The grayed out one right there is one that's a little smaller and was a little older, and the dotted one is one that's a little longer and a cycle that was just recently recognized on the 21st of November. So what we look at, we're always revising and looking at these cycles so that we can better understand them. And cycles are essentially the rhythms in the market. Money flows. And when cycles are formed very bullishly, where they rally most of the time and have small corrections, that's called the right-hand translation. And when you get that, it's a very high probability the next cycle will also be a positive cycle, at least surpassing the previous high. The yellow oval areas are where the little corrective periods are, and when the top comes earlier, well, then those are much bigger corrective periods. When the top is late, as you see in each of these cycles, the corrections are small. We had looked for a pullback in the stock market of about 4.5% to 6%. The decline in here in the S&P 500, right in here in that 2-week period, was 5.2%. Our target was right down over here, about 4,500. It got down to about 4,495, and we said it would be at the most probably 250 points, and that is very close to what it was. So we call this one a bullseye. Well, maybe slightly off the mark, because we thought that the low would come a little bit later. It actually bottomed about 3 days earlier than the earliest time frame that we thought it would do that. However, this big up week that you see right over here, it's kind of buried in our lines, is big enough to confirm that we are now in the next minor rising phase that you see right over there, which aligns very closely with the shorter grayed out one here. All of this a rising phase. That's why what we believed that the low would be made in December, somewhere in between these 2 time range lines, and you could see it was just on the outside of that, and that it would go to a new high. That's the highest probability. The projections that we have are either stalling at that minus 61.8 and then turning back down, or being more aggressive on the long side and getting up over here to about 48.70. That's the bottom of that fib extension. There's a dominant 78.6 at around 48.90 or so. So 48.70 to 48.90 is the outside. That's why we said in the beginning of the show that we thought it would be maybe only about 1 or 2% above the old high before the longer term cycle patterns that you see right over here, before those come into play. I'm going to go far out here for you to see how those line up, and you can see it coming down right in here. When they were both coming down right in this area right there, that gave you a very significant decline out into this corrective period back in way back here in 2018. So we're getting into a period right in here that is a lot of risk. That aligns with our monthly patterns and our quarterly patterns, which all suggest that the stock market will have a rough period into the middle of next year. And we talked in the beginning of the show that we thought it would be a significant top, and we're getting into this very risky period. So you can see we're projecting down to that 20% decline, which is a bear market, but it could go further than that. And there could be more than just this decline time-wise, which goes into the middle of next year. It could be a longer period of time based on the fact that it has a lot of correcting to do based on how far it is from the average growth rate and how far it is above the GDP rate. So all of that makes it massively overpriced and sets up a pretty good size correction. We're going to do a big picture video where I'll show those long-term charts just in the next couple of weeks. So that's a look at the weekly chart, and I'm going to go a little bit faster now because I've explained all of that. Here's your daily chart, and what this daily chart is, it has in there our complex cycle structures, and you can learn more about that by becoming an askSlim member. And you can see in here that the normal structure has two the lower two different channels in there. When it blasts off into a third channel up on the top, that is really shows you that there's a tremendous amount of strength. The magnitude of this advance was very strong. Still, it wasn't strong enough yet to turn our option bias indicator. You could see right over here it's yellow. It went neutral from green. You see all of this positive period right in here, and then it turned yellow right here. So it's still neutral. This needs to confirm and turn positive. If it doesn't do that, it says that longer term trends are starting to weigh on it. So we're going to be looking for this to turn green, and that's a P3 level, we call that, and right now it is at neutral still. That's an important indicator, option bias indicator at neutral. This is the momentum conditions right now, and this is the slim ribbon right in here, and shown in a different form than we normally show it on this show. Because it's in these, it gives you these shaded areas in here, and it has turned positive again. So it went negative for a brief period of time. The slim ribbon PO turned neutral right over here, and now the slim ribbon is green and positive, and that gives you an indication that it is likely that for the short term there is upward momentum that will continue to help the market move to the long side, to the upside. Here you have our 2-hour charts, which are really phenomenal, and on the bottom of that is the two indicators, the slim ribbon PO, which you could see when it turned negative in here, it was giving you these negative resumption momentum condition signals. And then the slim ribbon, this is our market condition indicator. And again, this is proprietary. You need to be a level 4 member to get these indicators. And when it comes down and tests under the 25, doesn't get below the minus 25 right here, and then turns back up, that is positive. What that says is that the longer term conditions are still driving it to the upside, and that is a very positive condition. Look right over here, the slim ribbon turned positive, the slim ribbon PO turned green, and you get this upward resumption for momentum signal right over there on that green arrow. All of this is positive. Thanks for watching that askSlim special video. Now take a quick peek at our annual askSlim holiday special. Great holiday gifts for traders and investors. Give the gift of askSlim. These are our special rates, in fact the lowest of the year for 3-month memberships, and they are non-recurring. So if you give this gift to somebody, you won't get billed again, and they won't get billed again either. Give the gift to someone you know who loves trading and investing, or give the gift to yourself. It's great for first-time members at askSlim.com to really see what we do. Use this special to try a higher level if you're already an askSlim member, and do that for 3 months. And then we're going to give you a bonus gift. We're going to send you an Amazon gift card that's going to help you pay for part of these memberships that you give to somebody or give to yourself. Let's take a look as we go to the askSlim page in here. And this is the main page, and what I want you to do is to go to the very top, as you can see, that line for our holiday specials, and then click on this little green box, save 30% or more, and that's going to take you to our special holiday page where we have these offers, and you'll be able to see that there are 4 different gift options, and those are for our level 2, 3, 4, and 4+ members, and you can see that we're going to give you back an Amazon gift card depending on which one you take for level 2, level 3, level 4, or level 4+. So if you take level 4, you're going to be able to get a $100 gift card back for that 3-month membership. And then we have the list in here of everything that's included in each of those memberships, just a tremendous amount of content that is both educational and analytical. There's no place you're going to learn more than what we teach with our amazing staff of 4 analysts that teach you all of the time the great things you need to know about trading and investing. So please do go to askSlim.com and take a look at those holiday specials and give that gift of askSlim. Thank you very much for listening.